Hey, what's up, everybody? This is Marseille, aka the Property Pastor. Today, we're going to talk a little bit about the four wealth generators of real estate investing, and I want to talk to you primarily from the standpoint of a buy and hold investment. You'll hear me talk about that subject a lot. What a buy and hold investor is someone who is not flipping a property. They're not trying to buy it and turn around and sell it really quickly, but they are holding on to that asset and generating income each month through rental income. So let's talk about those four wealth generators. The first one is cash flow. So cash flow is basically the amount of rental income that's left over after you pay the mortgage expense, any insurance, any taxes, utilities, anything that comes along with the property from the standpoint of property management, and things of that nature. If you have to do any kind of upgrades or repairs or things of that nature, they're going to decrease cash flow. But cash flow is basically the primary driver. With any property, you want to have a cash flow positive situation because that means that you have excess money left over after all expenses are paid. The other wealth generator is tax savings. So from the standpoint of being a real estate investor, rental expenses and your property depreciation are all taxable, are all tax deductible expenses. What happens with your rental expenses, from the standpoint of, like I mentioned earlier, if you're paying utilities or you're paying your mortgage interest, things of that nature, those are tax deductible expenses. In addition, the property itself depreciates over time. So from the standpoint of, you're able to deduct about over the course of 27 and a half years, that overall asset value can be divided by the overall lifespan of the asset and deducted from your taxes. So as an investor, the good part is that you are taxed basically after you pay expenses. On the individual level, though, us individuals who work, if you work a regular job and what have you, as an individual, you are taxed before your expenses. So you can't really take a lot of expenses out. But as a real estate investor, you're able to take a lot more deductions from your tax bill, which is an added benefit. That will lower your income significantly in the eyes of the IRS, but also allow you to sustain and maintain profit. Next thing I want to talk to you about is debt pay down. So what happens is, at the end of the mortgage period, from 25, 30 years, or depending on the note length, on the length of that note, cash flow is going to increase significantly because there's no longer any principal to pay down. And the benefit of being a real estate investor is that a tenant is essentially paying the mortgage for you. If you analyze deals properly, get good paying tenants and things of that nature, screen properly, and do your homework, you can benefit greatly from debt pay down because you're now your property is having a lower debt income on it, which also creates what we call equity. And the last thing I want to talk to you about is appreciation. Appreciation is essentially that what happens there is the real estate value of a property will rise over time. And these things kind of rise and fall, much like we see in the stock market and things of that nature. Some years are 1 to 2%. Some years are as much as 7 to 8%. Some years property values actually go down. It just depends on economic factors and things of that nature. But in the long play, in the long run, properties appreciate over time. What that does for you as an investor is that property purchased today in the future will appreciate and be worth more tomorrow. So, like I said, it varies over time, and appreciation is really kind of icing on the cake. I don't buy for appreciation. I don't recommend you do. That's more like speculation. As an investor, you want to minimize risk. And really, so as I said, those four wealth generators are, let's review them: their cash flow, their tax savings, depreciation, debt pay down rather, and then in appreciation. Let me say them again for everybody who's paying attention: cash flow, tax savings, debt pay down, and appreciation. Hey, look, it's been my pleasure to bring you some more content. Hope you learned something today. Look forward to talking to you again soon. God bless.